Also, for those of you that were wondering, this will all be recorded and you guys will be able to access that. I'll make sure I'll send Nine the link. It will be uploaded to YouTube. We're gonna start off very simple. All right. I don't want us to have such a big format and this to be too structured in some sort of way. All right. We're looking at price, and there are 1,000 different ways to read price. All right. DTT is one of them. I personally use a lot of ICT concepts. Purely data based is another way, which is how I personally see DTT in some ways. But I want to talk about simplicity today because the power in statistics and data and all that you've heard so much about probably recently, if you've been going through social media, in my book is simplicity. It's how you can have data driven frameworks and you can have a rule based approach with defined results. Now, what do I mean by this? Well, very simple. Defined results is I know the win rate of this. I know how often this should happen. I know where it should go. Average levels, average deviations, right? Knowing DTT in mind. But a big thing to keep that simple is bias. So the first thing I want to showcase is really a simple view of bias. As I said, I love data, but that doesn't mean that I love super complicated data. Personally, as a trader, I only use the simplest stuff. Of course, Rice Statistics offers a lot, but personally, that's not what I'm looking for. Um, I want to try something out here. Let's try sharing the virtual camera here. All right. Quick thumbs up if you're following along. I tried Edgeful for a month, so this is familiar. Definitely. Definitely. I'm not going to lie to you guys. It's a very similar platform. I just have a different view of data that they do. But just looking daily standard time bias, right? Out of nowhere, we see 66% win rate. I like to go about it and say, hey, we're Tuesday. Well, Tuesday is a little smaller win rate. Previous day low bias, 62%. Okay, what about on CPI? Right? I want to filter based on CPI month over month. Well, now all of a sudden, a little bit better of a success rate. So things like this is what interests me to move forward in some sorts of ways. Sorry, guys, got a message. I had to check that real quick. But just to get back on track, my favorite frameworks are definitely session-based. It was too much info for me at that point in my education, but I love the data and definitely want something like this once I am more consistent. Love to hear it, Keith. Love to hear it. But I do get your point. It's like when you have so many data points, like for example, I'll tell you guys, we're at 1.7 million individual data points in the right statistics. It's like, okay, well, how can that be useful to a trader? Well, the goal is not for one trader to be able to use all the data in there. The goal for me, at least, my vision with that, is that every single trader can take a little piece of it. So for example, I'll give you the simplest thing. Something I've used since I started as a trader is seasonality. Okay, well, there are free resources accessible for seasonality, but I still wanted to include it in the app. Well, see, that's bad. Nice that I'm showcasing a bug for you guys where we don't have the current data. Okay, well, I can't even show you seasonality. I should have double checked that. But there's a bug in the app right now, which, yes, I'm going to fix as soon as this call ends. This is triggering me, but that is very special timing to showcase this to you guys. But something as simple as seasonality. I know a lot of people get retracements to opening prices. More importantly, retraces to, for example, midnight open got very popular recently, especially around social media and things like that. So now showcasing this, having accessibility to that data, does not mean that everyone's going to use it. But it does mean that if someone trades that, he's going to have a very high, how can I say this? He's going to be happy to have all the insight about it. And of course, looking at the frameworks, now I can know when my retracement starts, how long do they generally last, how big they generally are. Things like this are very important. Like for example, here, you'll see you have a 60% chance followed by 50% chance in looking at hourly time intervals to start a retracement to midnight open. And if we go back to the dashboard, you'll see you have almost that same probability of reaching midnight open. So the framework time is when you start the retracement. But on a day just like this, you're trading around midnight open, so that doesn't really help you. But that's why you have frameworks like, for example, London high and low. If we go down to the 1 minute, we'll also notice the lunch framework. That is Thursday. Let's go look at Tuesday, if I'm not mistaken. There was a lunch framework of the noon to 1 range. This is also something I utilize personally through data. And see, we took out that raid. So once we reach 1:30, which is when the PM session starts for me, then I want to see price head to that lunch high. And if we go back to right statistics for a second here, we can go to the ranges, look at the New York lunch session, and we'll have the same exact data we just saw of a high probability framework. And of course, overall, it's a high probability of taking out both sides. But what I'm going to be interested in is, what if we took out the high, for example, or here, you know what, let's look directly at the low. So what if we took out the low just after? And we're going to give it 30 minutes here, which is what I like to look. So 13:30 to 14:01. No need to bring precision into here. But you can see if we did here, let's force the low actually, so we have the accurate data. Well, if we take out the low, there's a 66% chance. Now this is a majority chance. And as you guys can clearly tell here, the probability is that we take it out before 4 p.m. to just having some simple frameworks like this. And this is how I personally view DTT, is as there's so much you can look at in the markets, but this gives you some very clear points you can refer to. You have deviations, right, of specific time-based models, and then you have root candles, which are an area that price will gravitate to constantly. Very interesting stuff in that direction. As I said, very excited to bring data into this. Sorry, I just had to drink some water here, guys. But just to get back on track with, for me specifically, database frameworks, well, I'm always looking for, as you guys can see on my charts, I'm looking at retracements to New York opens, retracement to daily open and midnight open. Of course, in the app, I have time-based windows when I know that we have a high probability of starting a retracement. So for example, where did we start the retracement to midnight open here? It is the furthest point away. So we started it here. We have a high probability of starting it just at the start of the PM session, by the way. And then by 2 p.m., we should be reaching midnight open. That is what data tells me. That is what the charts that we just looked at on the retracements told me. And I am going to dive back into it very quickly, because I do want to showcase this. As I said, it's a little weird for me to do this sort of call where I'm going back and forth between the app a lot. So if you guys have questions along the way about the format and so on, more than happy to answer them. But as you can see here, probability spikes around New York Open, 9 to 10, 10 to 11, and then dives back down just until 2 p.m., which is still quite low in this area. But if we look at something like, let's look at CPI, we know that on this day, we were looking at Wednesday. Then you see that, oh, well, all of a sudden, I'm not looking at the numbers really here. I'm seeing highest probability is going to be near the open. Of course, we're going to gravitate towards it when we're closest. Then we dive back down, but then we have a spike here. This is what interests me. It is the spike that we see in the curve. Then we go back down, and I know that 2 p.m. we have a higher probability. So if I'm starting and I'm looking for a trade in the afternoon, well, I don't use DTT framework. So for me, that's retracements to the prices and session rates that I understand I have a high probability of reaching the other side. So now adding the confluence from, hey, this level is 70% chance of being hit before the end of the day. Or was it 66%? Let's use the right numbers. Now midnight opening price has about a, what is it, 40% that we see right here? 30% chance of retracing between 2 to 3 p.m. Then you can add that 20% and add that 20%. And you understand that within this 3-hour time period, we have a 70% chance. Okay, well, me taking a trade just at the entry and allowing myself to hold until 4 p.m., 16 o'clock, then I understand there is a very high probability of reaching these levels because I have confluence from multiple different frameworks telling me we should go higher. And more specifically, we should go higher to here. And then, of course, you can bring in current high of day. You have AM session highs and lows that you can use as raids. These are just more complex in nature. And once again, I wanted to speak about simplicity. And I don't know if you guys use these concepts, but I am a big fan of SMT. And on Tuesday, it was SMT heaven. Every single perfect high and low that we got, we had some very nice divergence, right, between swing points. If you're unfamiliar with it, I'll link a quick video just showcasing what it is, but definitely a very strong concept in my opinion. Also, that framework that I'm showcasing, right? I only personally trade New York, but if you're trading London, you can use the same exact framework with Asia high and low. So for example, here you had bullish, and then right after in London, you had a run lower because we took out Asia high. And if we look at the next day, well, this one very simple, took out Asia low, going for Asia high during London. That's very, very straightforward of a framework. This is Wednesday that we're looking at. Well, we were looking at data for Wednesday on Tuesday, so that was a little bit special. But if we look at the retracement here, this is what I framed personally on Wednesday, because I opened and I was a little bit confused with CPI. I'm not going to lie to you all. I'm going to be honest here. I was a little bit confused. I saw CPI go higher. My goal was to take a long, but then I had to wait through all this whole move lower. And once we reached that midnight, reached that daily open, I understood that price reached its objective. Moreover, we had SMT at London low. One asset took out the London low, one asset didn't. And once again, as I just showcased to you guys, this is a very high probability framework where overnight we took out London high, and now during New York, we're going to go reach that. In this case, we did not reach it. This skews the statistics. But this is why I'm looking at correlated assets. Now I know since ES took it, I can treat NASDAQ as if it did, and this has a high probability of being a reversal point. And this is what we saw happening. So definitely some very interesting stuff there in simple data. This is what I wanted to showcase specifically. And of course, another beautiful retracement to midnight open, daily open. And then you didn't have a lunch raid, but let's be honest, here you're looking to long to here. Okay, well, if you entered here and had correct risk management, then this is still a win. So even if frameworks don't often complete in these specific manners, right? Well, not don't often complete, as we saw the majority of the time they do for the lunch framework specifically. But even if this framework does not reach your final objective, you can still make money. As we always say, right? Pay the trader. But I just wanted to showcase these little simple frameworks and share some data behind it to showcase that I don't want to be vulgar here, but I wanted to say I'm not bullshitting you guys, right? And now we can look at today. So showcasing these approaches, right? This is what I personally like to look for. I personally like to trade. Now, if we look at today, what do we see? Well, okay, we have a London framework. And as I said, I don't anticipate that it's going to go down there now. But this was still a 70% framework. Right? If we go back here, let's go through it. Why not? Let's do a lot of back and forth. Let's look at the new London session. Let's look at it on a Friday. And what was our news today, guys? Any of you guys know? Was it consumer sentiment, I believe? We were looking at prelim consumer sentiment right here. Let's look at this. Let's look at the raise. 87% chance, 82% chance, right? And if we look at highs and lows right here, well, we don't need to filter that. But if we look at the same framework we were looking at, where the high was taking before 9:30 and we forced a high raid, then we'll see 75% chance. So we had a 75% chance. Oh, I wasn't even showcasing it to you guys, right? So just wanted to showcase. There we go. Yes, Keith. Thank you for mentioning it. Friday, we're looking at this. 75% chance of reaching London low. But then we see here on our charts, that's not something that worked. Okay. Well, data doesn't mean it's going to work all the time. 75% tells me it works 75% of the time. And then, of course, you're going to have good streaks and bad streaks. That's why I usually like to refer to the last 3 or 5 years of data to have just a more recent picture about it. But overall, I know that price will balance. I know that that data, that statistic will balance around 75%. But now what do I do on a day where, for example, today you would have been looking for? Well, you could not have an entry. That's the truth. And if you were looking to short, well, are you going to short right at the open? No, you're going to wait for some sort of opposing movement. It is the start of a session. A very well-known concept here is that at the start of a session, you're looking for a fake move. Some people like to call it a Judas swing. Some people like to call it manipulation. I like to keep things simple and just say a fake move. So for example, if I'm looking to short, well, I'm going to frame this whole move higher as a fake move. I personally trade breaker blocks. So for me to have a trade, for example, a short, I need a breaker block. Now, I did not have an entry today. I'm not going to lie to you guys to go short. But this is the first bearish breaker that we formed in the session. And that gave you frameworks to go lower to midnight open. So even though we didn't reach all the way to London low, I understand that reaching midnight open, and if it is reached at that time specifically, it's also important to know that this should now become a support area. Now, how do I know this? How can I say this? Well, through data. So just as you can look at correlation, you can also look at inverse correlation, right? And that goes on for data as well. Just as I can look as this framework is 70% successful, well, also means that 25% of the time, it's not going to be there. So if I have some small statistics, like for example, understanding that reaching the New York Open is the New York Midnight Open, sorry. This is looking at the Daily Open, but we'll showcase this for now. So the Daily Open in this case, I understand that it's high probability to retrace to it between 9 and 11, right? Two very high probabilities here. But then as we dive deeper, I understand that here we have almost a 74% chance of not going to it. Okay, well, what is that? That's what a lot of people would call support, right? Where we will reach that level or not, but past 11 p.m., we shouldn't go back to that level. So that's an area where I can look for a long setup here and trust the fact that it's not going to reach it. And for me, it was very simple. As I said, I like to trade breaker blocks. That is just my personal preference with the markets. And seeing, once again, the first bullish breaker to form was successful. Of course, there was a little bit of consolidation here. Wasn't too comfortable, let me tell you. I was in this trade this morning, so it was a little hard for me to live through this shit. But if you would have just waited for an actual entry PD array, as I said, I am personally an ICT trader, ICT concepts trader, and this is an inversion fair value gap, closed above. I entered right on the candle after, but still not very pretty. Not very pretty at all. I don't like drawdown. Well, which traders like drawdown, right? But we all know being here. We all know what it is. Part of the game. And a very simple objective for me was just the opening range high. This is another session framework that I personally like quite a bit. And let me actually bring it in here. The day's not over. Where is my opening range? And for me, that is first 30 minutes right here. So just targeting this after 10:30 is a very good objective for me. And you know what? Let's showcase it. This is why sometimes I look at the first 15 minutes, because when we are very volatile at the open, then I'm going to look for a framework like this, which, as you can see, this is what I was looking at this morning when I saw this whole move higher. I was looking for a framework to go back down to the opening range low with midnight open, but didn't give me an entry personally. Right? It's important to follow a model. Always follow your model. And I guess that's another thing that I like quite a bit about DTT, and probably a big reason why a lot of you guys are here as well, is that you're not stuck based on time. Like for example, my model, I'm not going to lie, the biggest downfall for most people is that you're only going to be trading it an hour a day, for example. But with DTT, every single moment of the day, you can have a high probability statistical framework. Because that's what it is, whether you guys see it or not. But DTT is based on data between specific time windows. And that gives you a lot of access. I don't know if you want to speak on that, Nine. I don't know if I'm slandering or saying bullshit here. But definitely love to see that. And that's what allows you to be able to trade with an edge throughout the day. So definitely appreciate that a lot. And I've been talking about it with Nine a little bit, but I'm definitely going to be bringing some data about DTT at some point here. Can you get the statistics on whether a specific time range takes a liquidity point based on time? For example, whether the 10 a.m. candle takes the 9:30 a.m. open. Yes. So we do have the 9:30 open available. Is it in? No, it won't be in intraday opens. It's going to be in session opens. We're going to look at the New York Open here. And we're going to look at specific time intervals. So when you say the 10 a.m. candle, do you mean the 10 a.m. 1 minute candle? Because I believe we changed our resolution to be 5 minutes at a minimum. So if you're looking for minute precision, you're not going to get it. but you can go down all the way to 5-minute precision. To be honest with you guys, 1 minute is something super easy to implement. We actually had it in the app when we released Ray Statistics, but it just turns out, like, even looking at the 5-minute chart here, it's a lot of data points and oftentimes could overwhelm people. But here we're looking at 10 a.m. So let's look at the start of it. So I'll just grab those, and you can see here from 10 to 10:05 specifically, we had 23%. Now, of course, oh, wow, I'm saying this and I'm still not showcasing it to you guys. Now you can see it. I was showcasing the New York Open as part of the Sessions Opens category, and you have multiple different time intervals with the minimum being 5 minutes. As I said, we're not bringing in 1 minute. But what I did want to showcase is that for me, the power of these things is in the filtering. That's why you can see up top here, you have so many filtering options. So for example, if you're looking for a retracement to the 10 a.m. to the 9:30 open between 10 and 10 a.m., well, maybe filter based on the size it is. Of course, my favorites, I'm always going to filter based on day of week, the direction that I'm looking for. This is the daily direction. And then I'm going to look at the retracement direction. I'm going to filter it based on the specific news I have, which, as you guys can see, we have all of them. All of them for multiple different currencies. I like the filtering into it. But yes, if you wanted to see that chronos from a 5-minute candle perspective, a quarter of the time it will be there. But that's why I like to go a little bit higher of a resolution, because I feel like 5-minute is very pinpointed as a resolution. But see, just looking here, we see 35% from 10 to 10:15. So very simple framework in that regard. Does that showcase the data you were interested to see? Give me an answer here, Kronos. Tell me what you think. That's a retracement I look for daily. Love it. Love it. You know what I personally look for? Is the move after. Because you telling me this, I was quite interested to show you, because that's also something I look for. And of course, looking at it right here, right after 10 a.m. here, well, at 10 a.m. specifically, we were there. And then right after 10 a.m., we returned there. But what I'm interested in is that 10:30 mark. 10:30 marks distribution. That's how I personally look at it. So right after 10:30, we're either going to target the current high or current low. So if I bring in the AM session high and low, well, we're not going to see it unless I go in replay mode. So let's actually do this. Let's do 9:30 to 10. And we're going to target one of these two sides trending. Now, of course, for me, that would have been London low. And that was my main target for today. So I really wanted to short here. But when I have a long setup, that data tells me, okay, well, we shouldn't return to midnight open anymore. Then now I know I can look for an expansion higher. And as you guys see, for me, it's always trading a unicorn model. If you're unfamiliar with it, it is trading a PD array overlapping with a fair value gap, overlapping with a breaker block. I'm going to get it. No worries. But definitely some very high probability frameworks. I'm always saying this, and this is where what Keith was saying earlier, that you can get overwhelmed with data, right? But this is where this comes in. I don't use 20 different things. There's not a day where I use, okay, I'll use a retracement there, candle profiles there. I'll use the economic news data from the news, profiling the day. No, I don't use 20,000 different things in a single day. I have my levels, which here, I'll showcase it. Why not? We're here that I get from the dashboard. This is something that is also very popular. Just average range levels, so average distribution. I always like to filter based on the news. And I use aggressive filtering, which if we go in the help section, it will display. We filter based on the last 3 years and the specific time period. So for example, today, filtered based on Friday in the last 3 years. And I get my news in. And I get the data about my gaps. I get the data about my average candle. Where is it supposed to form? This is what I'm interested in. This is simple data. And then I use intraday session frameworks along with retracements to opening prices. This is how I personally like to engage with the markets. But there are no limitations to data. Data tells you when a specific concept works. That's the main filter, time. So if you find something that you like, for example, you guys are here in DTT, which means you like trading data-based ranges, right? You have your projections, well, it has a high probability of reaching this. Oh, I'm going to take that framework to the root candle here because it just reached MRP. You're going to have some very good frameworks based on data, and you know when they work and when they don't. And that's why you have the DTT models. So no matter what you trade, no matter which concept you look at, you're always going to have some high probability frameworks as long as you filter it by time. So find something you guys like trading, like Kronos was talking about, right? Just 10 a.m. retracing to the 9:30 open, and just figure out how to trade it profitably through data. That's my personal view with the markets. And of course, Friday is not over yet, talking about Friday specifically, but for me, that just resulted in me taking this trade. I took a partial along the way. I'm a big believer in taking partials, and I know that recently it has not been very popular. A lot of people have been hating on partials, but it's important for me as a trader, and just as more so of a younger trader. If you guys were wondering, I am 21. I have been in the markets for a year and a half full time now, but I still struggle with psychology. So the easiest way to fix that is not to build my psychology. The easiest way to fix that is to be happy with less. So to take profit often, pay myself as a trader. And as I'm building confidence, of course, I'm building myself to hold further. But for me, that was here. And it doesn't seem like it, but we did hit my partial right at this level below. So let me just bring that here. We actually did reach it here. I got filled. So that was my partial. Why? Because sweeping liquidity in the premium of a range, along with my standard deviations, which is something maybe you guys have not seen before too much, but these are standard deviations of my breaker range. These are higher probability than manipulation like standard deviations. And then looking at opening range high, I was quite satisfied with this, so I fully closed my trade, and I'm happy. I caught a piece of the range, and that's all I need. I don't need more than this. And that's also something I want to showcase. If you guys have a DTT framework, but see, that's the thing though. With DTT, you have very clear rules. With most models, and when I talk to other traders and things, I have to tell them, you have to be careful. You have to pay yourself, right? That is the easiest way to go about things. But with DTT, you already have very clear rules based off of that. If your target is going to be that statistical deviation of price during a specific time window, then that's going to be your target because it's already backed by statistics. Your edge is there. So we've been in here. How long have we been in here? 42 minutes. I am open to questions. If you guys have other questions like Kronos did about data, we can walk through the app. But for me, reviewing price is very simple. I did want to share with you all how I personally use statistics in the markets. And as you can see, it's a very simple way to look at it. I look at specific sessions, look at highs and lows. Very simple stuff for me. And then I look at retracements to opening prices, which is just a way to have a dynamic insight into the day. Because those opening prices will never form at the same areas. But the edge will always be there to return to them. So this is something that I personally like to do. I'm not saying you guys have any questions, so I'm guessing it was all pretty clear. How'd you guys like the data? I'm curious here. I'm going to be the one asking the question for a second. And not talking just about right statistics, or if you like the app. I don't care for that. I'm really just talking about the statistical data that we just looked at. Data is sick? Well, that's the easiest way to put it, Keith. Definitely did. Just looking for some insights, right? Because as Keith, you said so yourself, right? Data can be quite overwhelming. And with my approach to the markets that, as you guys may have seen, is incredibly simple. Clear as mud. Something I would have to dig into on my own. That is a nice way of putting it too, Mike. I like that expression. But yes, there's a lot of information, right? I'm interested in how you collected the data. All the data is collected manually. So through scripts that analyze historical market data. Does that make sense, Nick? I can go a little more in depth to explain it, giving you an example. Love this because time-based liquidity is harder to spot on the chart compared to price-based liquidity. Having statistics on those points is very useful. Definitely, right? Time-based liquidity, opening prices, for example, right? Specific prices, specific bars, specific candles. That's why I'm very interested to look at root candles and profiles from root candles. I did run some data in the past. Perhaps we'll push that a little further at some point, but definitely interested to see that at some point. Yes, can I see the example? Yeah, for sure, Nick. So here, let's use something simple, and oh, I do need to remove that. Give me a second. I have the macros set up in that indicator without text. Why do I have that on? That is weird. Okay, I'm just gonna remove all of that for now, and we're gonna go look at a session, and I want to see a session that took out the high and low. Okay, let's look at London here, for example. Right, so you can see that there is a time-based session. And that time-based session is from 2 a.m. So let's actually draw it with some sort of precision. 2 a.m. to 5 a.m. So if I want to collect data about London, well, I'm going to collect data about the high and low, where it forms. I'm also going to collect data about when it forms. And for example, just here, let's go to the ranges analysis just so I can showcase that data. So for example, London session, as I said, it's my favorite. So it's the one I usually like to use as an example because, I mean, it's my favorite because it's the one that pays me the most. Let's be honest here. If we're all traders here, we're here for the money. That's what trading allows for. And what the money brings, right? Freedom of time as well is a big thing. But the one that pays me the most is my favorite. I'm not going to lie. So if we're looking at the London session, right, we have a lot of data about the average range, the average distribution, manipulation, retracement, and all those metrics are explained in the help sections. For example, the distribution of a bullish candle is from the open to the high, retracement from the high to the close, manipulation from the open to the low, and vice versa for bearish candles, right? So you have all those metrics that you collect by looking at the chart and seeing, here's my low, here's my high, what time did they form, and what distance did they do, visualizing a candle from here. So you have the open of the session, which I'm not going to draw with any sort of precision. You have the open of the session, and then in this case, we went lower, actually, but this is a bullish candle. We closed above the open, so the manipulation is from here to here, distribution is from here to here, the retracement from the high to the close. These are the standard metrics for a session, right? And then you have the rates. And what's important to me with the rates is, did we take it out? And if so, when? And then we can go in that data and see, okay, well, did we take it out? If so, when? By combining all of these sessions. What you see here is a table with all of the London sessions. And you have quite a bit here because we're looking at 19 years of data in this case. But you can see the sessions, you can see when the high and low has formed, you can see the high rate, the low rate, if there is one, right? If it's empty, then there was no high rate. But here you can see, even in 2006, high was rated between 5 and 930, 930 went for the low. I just love seeing this. It's a very good framework in my opinion. All the range data and all of that, of course, you have here. And then you combine those, and when you filter, for example, I only want to see data about Mondays, then it's going to give me all the Mondays here, and then I'm going to be able to look at the data for a London session on a Monday. I like this chart quite a bit as well, where you can see the impact of the candles through time. So definitely 2008, 11, 24 was a big one for London. And we can see also had a 2.49% distribution recently in 2024, August 2024. I remember that session. That was horrible. You can, of course, look at it with the measurement unit of that specific charts. I personally like to use percentage. I feel like it's more of a stable representation throughout time. Don't get me wrong, I am a fan of statistics, so I will take a weekend to do a deep dive. No worries. I really didn't want to showcase it through the vision of the app, right? It was just fun to have the opportunity, which thank you, Nine, for inviting me up here, to just share data with people. Because it is interesting stuff. And whether you want to use it or not in your trading, it's sometimes nice to see how other people interact with it. And more importantly, seeing the market dynamics between what's going on, right? Is it possible to get data on the first fair value gaps on 1 minute and 5 minute after specific times? Not currently, but we do have the fair value gaps analysis, which we'll be releasing soon, with an option to filter based on first presentation fair value gaps. So it's going to be definitely going to come. Definitely going to come. So we're going to be able to analyze pretty much, as you said, right? First fair value gap after specific times. That's going to be a user input. So it is coming. I'm not going to lie to you guys. We do have a lot of stuff cooking up for Rice Statistics. So, of course, if you guys want a little giveaway here, actually, I would be more than happy to. I don't know if you have a giveaway bot, Nine. If not, we'll set that up through your community and be more than happy to give away a few spots to the DTT crowd. As I said, a big fan of DTT. But yes, we have a lot of things coming for Rice Statistics, and the fair value gaps analysis is one of them. So at some point it will be available, Ali, but not at the moment. How would you collect data on a model? Well, it's simple, actually, right? A model that is rule-based is very simple to collect it, because if I have the rules, then it means that it can be codified. It is mechanical, so you can get data about it. But the truth is, most models are not fully mechanical, right? Like even my model is mainly mechanical, but then I do have some discretion into it. Like sometimes I go against my bias because I know now we're going to be trading a retracement. That's not something I have personally made mechanical. So now how do I collect data about it? Well, I don't need to collect data about my trades. I need to collect data about the moves my model catches. So for example, with DTT, you can look at data about, well, what if I enter here? What if I enter here? Yes, that is doable. But the most valuable data is more so, how do we interact with those levels? So for example, you see the average model ranges, minus and plus, right? Upside and downside. Well, okay, when do we reach them? How often do we reach and expand past them? Creating profiles based on which one was reached in what order. And then how did we interact with the root candle? When are we returning to the root candle? When we return to it, do we close through it and retest it? Right? Can we create profiles out of it? So this is just some brainstorming ideas that I have just out of the bat. Is there are multiple different ways to test a model, but the most valuable point, in my personal opinion, is going to be to have data about the moves that you're looking to trade with that model. So for example, for my specific model, I'm trading unicorns. Well, it's important to have data about my trades, sure, but the most important data are going to be about standard deviations, right? Because when a breaker block forms and I want to use my breaker block standard deviations, I want to know the probability of hitting each level, and more importantly, in how much time. Because if I know that the probability of reaching 0.4 at 4 standard deviations drops if it's past 30 minutes, wink wink, then I know I'm going to be looking to close my trade if it goes past 30 minutes duration. This is how I collect data about specific models, Nick. This is how I personally like to do it. There are thousands of ways, as we just discussed, right? There are a lot of things to look at with data. But the truth is every way works, because you're going to get the data behind it. And you're going to know when it works, when it doesn't. And I have yet to found a specific logic, a specific concept, or a specific way of interacting with the markets that doesn't work at least within a specific time window. So the next time you see people trading support and resistance, trend lines, your question shouldn't be bashing them saying it doesn't work. It should be, okay, well, what are your specific rules to make it work? And having the data behind it allows for that little question to be answered in seconds. Do you guys have any further questions about this? I'm loving this, by the way. Love the interaction. Love the DTT community. Thank you guys for showing up. Thank you, Nine, for inviting me up here as well. Appreciate that greatly. It was fun. As I said, I don't like structure. You guys may have noticed. I like for us to get in a group, look at our charts, and talk about data. Where can we find out about this app? If Nine will let me, I'll send you directly. I'll drop our website in here, and you can learn everything there is on the app, all the available analysis, and how to access it. What do you think, Nine? Can I drop the link in chat? Did want to mention it. He might have went for a little break here. So here, you know what? I'll drop it in chat and he can delete it if he wants to. But I grabbed it from your Discord bio. That is also a way to go about it. It's definitely. But we are looking at Rise Statistics. Rise is my brand, everything that we do within, and Rise Statistics is our financial market analysis app, which is just a very big name to say an app that will group all the statistics. This was actually founded back in October 2024, so it's been actually quite some time now. And when we started, I just found a lot of interest on data. If you guys have been here for a while, you might have seen me on Twitter showcasing data. This was way before the app was there. And then I asked people, do you guys want more data? Do you want to see more? And there was a lot of insight. There was a lot of people that wanted to see it. I launched an early access that got sold out in 16 minutes. I don't think I'm ever going to forget that. 100 spots, 16 minutes. So there was definitely interest for data in that sense. And so started working on the app, build the app, and now you can find it at risestatistics.com. I don't like advertising, in case you guys didn't notice, because I think that is not the best way in which traders learn. If you want access to the data and you want unlimited access to data and advanced filtering, then yeah, sure, go get the app. It is a paid tool. Why? Because it costs me money to run it. But I like times like these where we can jump in a call and I can just provide value by talking about statistics without having anything connected to it. So definitely appreciate the opportunity to be here today. My pleasure, Ali. When a mentor brings in something like this, it's much more trustworthy than an ad. That is true. That is definitely true because I'm showcasing what it is and how to use it. Definitely interested in that regard. But yes, definitely. I mean, my first goal with data was to bring some support to the things I use. So I shared my model and I have that video up for free on YouTube in case you guys are curious. But I do recommend not to go look at it. If you guys are in here, you have a great model. Stick to it, right? But I shared my model and I didn't want to just tell people, hey, my trades are high probability. And then, of course, I do these price action reviews every week myself in live events, right? But I don't want to just showcase it working. I wanted to provide the data behind it. Why does it work? When does it work? How often? I wanted actual numbers to it. And then I saw people had huge interest. So I'm like, okay, well, let's provide it about different concepts like retracements to opening prices. Another one of my favorites now that we just released actually, or quite recently. Well, I say quite recently, but it's probably been a month now. Just did a big update on it soon. Is recently is candle profiles. So just one way to look at all the market, right? A little like our bias analysis, but we profile every single candle as one of these specific profiles. And then you have the data about what profiles, and you can filter based on previous profiles. If you guys are familiar with ICT, this is MXXM, right? So just having access to data like this is truly interesting for me. Mike is unable to record my voice. That is unfortunate, 9, but I get it. I appreciate it, 9, and as I said, I'm very glad to be here in the DTT Discord. Love the community, love the frameworks, so definitely very happy to have been here. We've been here for the last hour. I think we can call it a day, guys. What do you guys think? If you guys have other questions, I'm more than happy to answer them any point in time. Thank you, 9. Appreciate that. But if we don't have any further questions, we're going to call it a day here. And of course, as I told you guys, this will be recorded. I'll send the link to 9 so you can post it somewhere. I did notice that at some point at the recording, my mic got muted. So it's going to be a little bit special there. But we're definitely still going to post it, right? An hour call, and probably 10-15 minutes of it was muted. My pleasure, Keith. My pleasure. Well, you guys have a great day. It was a pleasure to be here, as I said. Glad I could provide value in some ways to the DTT community. Have a good one, guys.